Look, it has been very difficult to get a clear narrative on the dollar. We started the week quite optimistic. We had help from Bill Dudley brushing aside the CPI downside surprise, talking about a rate hike this year. We also had the very strong retail sales data. So that was really how we've been leaning as far as this month is concerned, that the US dollar can do a bit better over the next few weeks. Supported by data, we do think expectations on the US economy are slightly too pessimistic, and so there's room for upside surprises. And we would expect that the Fed officials, for the most part, at Jackson Hole, are likely to be quite optimistic. But it has been interrupted, as you mentioned, those concerns over US politics. I guess we couldn't put in the calendar that the US dollar would take a hit from a bunch of CEOs resigning from advisory panels to the president, and those worries over Gary Cohn, and as you mentioned. So politics is certainly providing a headwind for the dollar against many crosses at the moment.
So, Sean, here's the thing. You think that the Fed's probably more optimistic about the U.S. economy than a lot of people think, but I thought the story really was that they are more pessimistic than the market is pricing about inflation, and therefore more likely to be less aggressive in terms of hiking rates. I mean, you mentioned Jackson Hole. There are going to be a lot of eyes on Mario Draghi, the ECB boss, to see whether he sort of communicates that same story that we're hearing from the Fed.
Yes, look, I think as far as the Fed pricing is concerned, the main thing for our dollar view, particularly into year end, is where we're most upbeat on the dollar. We're finding it very hard to make a bullish case nearer term, and certainly September, with the incredible political risk over the debt ceiling and government funding. But year end, look, the December rate hike is only about 35% priced, and so I think Dudley's probably more indicative of the overall optimism amongst the most influential members of the FOMC, rather than the minutes, which were admittedly indicating a little extra concern over inflation, but they are somewhat old. And Dudley, I think you're pretty brave if you think that Dudley isn't representative of the overall view. So I think he's in line with Yellen. That's what we'll expect at Jackson Hole. And as for Draghi, though, you would think that that's not the most obvious place for a keynote speech on European monetary policy, that he should probably save his ammunition. If he's got something he wants that is really market moving, then probably Wyoming's not the best place to deliver it.